much across the board, and Jeff Sica is with us this Tuesday morning. Jeff, I know that you're zeroing in on this possible capital gains tax hike. Not just a tax hike, it will be a doubling of the capital gains tax. That, I suspect, would really hurt the market. That's on your radar, right?
Yeah, and the market has taken pretty much an ignorance is bliss position with this at this point, because they haven't really looked at it. But when you look at it and you look at not only the capital gains tax, but the elimination of the step up and the capital gains tax at death, these are very, very important factors, because for the first time ever, the government is intending to tax capital gains for assets that have yet to be sold. So you have a lot of people that, through this multi-generational wealth strategy, that have assets they've held for decades in some cases, that when they die, they will be taxed on that day. This is going to create a very inefficient market, and it's going to disincentivize investing. Even with the capital gains tax go up, everybody's bouncing around all these numbers, 28%, 40%, whatever it is, they're shooting to make it higher. And the minute they make it higher, there's going to be people who are going to take gains, and there's going to be people who are going to be reluctant to invest because they're not being compensated for the risk they take.
Now, the market at the moment is sitting back, I guess, hoping that these capital gains changes will not occur. But if they do occur, you think it sparks a correction? When I say occur, I mean accepted in this bill in Congress. If it's accepted, at that point, does the correction start?
Yes, especially if they're retroactive, because people are going to sell, or if there's the potential of them being retroactive, people are going to sell, because even if it only goes to 28%, if you have the ability to pay 20% in tax now, as opposed to 28% in tax down the road, there's a lot of people who are going to pay the 20% now. And then there's a lot of people who are going to sell assets that they wouldn't normally sell just to avoid the amount of risk they're taking, which they won't be justly compensated when they intend to sell it. So there's a lot of cross currents here. It's a very confusing proposition from the Biden administration. But you said it before, Stuart. They are taxing success. They are going after those people, small business owners, and people who were smart enough to build generational wealth. They're going after them and telling them they have to pay their fair share, when in fact, most of these people have paid about 70% of the taxes throughout their lifetime.
I hate that expression, pay your fair share. Is 50, 60% of every dollar you earn, is that your fair share? I don't think so. Jeff, thanks for being here. I'm sure we'll see you again soon.